I take the word, and I like the Antti Honolulu greetings. No, okay. So my name is Christian, and I'm the CEO of a bank consultancy company based in Austria, and we have been doing bank consultancy for the last 17 years. And for the last 2 years, I started to build up a new fintech that's called Tritra. And we try to bring behavioral finance concepts alive for people making their own investment decisions with Tritra. But we're not speaking about what I do, but we are speaking about the 21st century banking and about the future, what lies ahead of us. And I'd like to start with some comments that I feel as being partner for the banking industry and doing a lot of consultancy and doing a lot of market research for the banking industry. And for the last years, we saw that there is a tremendous shift of obviously in the behavior of people. And of course, banks are trying to respond on that shifts. And the way they respond to me is not really satisfying enough, because I think they are too much driven by the issue of cost cutting and by the issue, at least for the last years, and that's then the ball for you, on regulatory issues and fulfilling the regulatory issues, and that catches like 100% of the CEO agenda. But what they oversee is that they earn money because they should be customer-oriented, and they should be innovative, and they should redefine their business models and the business landscape. So my primary point would be, and then we should start the discussion because it's going about the future. My primary point that concerns me a lot is that I see that banks primarily focus on giving people advice. Advice is based on physical appearance, so still people showing off in some branches, sitting there on the table, asking more or less helpless or helpful questions, selling products they could have sold without asking the questions ahead. And they spend a lot of money to improve this process. And I'm not pretty sure if that's going to save the future for the banks, because I see that when we ask clients, they charge banks and they value banks by the quality of service they get. And the service declines right now from the banking industry, so banks cut their own leg because they have to focus, and they focus on the wrong issue. That would be one position from an opening statement.
Yeah, sure. So let's take turns here. So my name is Antti, just try my last name, then there you go, Tarakkamäki. I'm a co-founder and managing partner of Bankify, a company from Finland, Helsinki. And we are actually improving the new generation financial life. So that's what we do. So we offer products to millennials to make consuming of banking products more interesting, fun, and social. So that's in short what we do. So there's not company presentation. What I would like to say, actually, I'm not here to save banks, maybe opposite even. Don't think me as a threat. The threat is the behavior, consuming, changing. I mean, do we know how in future banking will be consumed? That's really the question. And either banks getting it and they survive, or there's other players in the market who will take their position. And we don't even know in what forms, but I'm pretty sure it's digital only, the consuming way. And also from my background and experience is especially talking to these young segments. In our company, we are employing millennials. We are talking to millennials every day. Everything we do, we engage those users, and we try to follow how they anticipate the future banking products. And just to mention, we are not a bank. We don't want to be a bank. What we want to work with the banks and the fintechs to facilitate and accelerate this change.
Hi. Hi. So my name is Marius, and I'm coming from a central bank, a regulator, supervisor, overseer, the dark side of finance, the regulator. Here we are. I'm the only one here of that type, so please be nice to me. Right. I guess who are? So we are the regulator, the central bank, and we in Lithuania, we have a very clearly defined agenda towards innovation or the future of banking, or Fintech, as we call that back home. The way I see the banking community changing, maybe I can give you a very short story of my domestic market. Lithuania is a very small country on the fringe of Europe, not that north as Finland, but still north enough. And we have very innovative, efficient, profitable banks operating in Lithuania because they're coming from Scandinavia. And Scandinavia usually has been the citadel of really forward-pushing banks, regardless of the general feeling towards the banking community. If you look at the performance indicators of the banks in that region, it's a double-digit return on equity, cost-to-income ratio is really low. No, they're really doing a good job for the shareholder. And then the question is, what's wrong with it? And I already heard a point here. Maybe they have not been investing enough in technology. Maybe they're not doing something which do we want it, right? So my statement, which I'll start, is that the banking we will have such that we want. The demands of the consumer will define what banking system we will have in the future. So in Lithuania, the regulator approached those innovative banks from Scandinavia operating in Lithuania and said, we want innovation. We want Swish. We want mobile payments, what Danske Bank has introduced in Denmark. Yes, it is programmed in Lithuania, but it's not run in Lithuania. So why we don't have all those innovations from very innovative banks in Lithuania? Central banks usually are very powerful institutions. So here I approach the banking community in Lithuania and say, look guys, we want you to innovate. And they say, that's not what we want. We don't feel a reason. We are profitable, we are efficient. If you want me to innovate, to change those green screens of my mainframe into some blockchain-based, fast settlement systems, that's called expenditure. If you want me to spend, there must be a reason. I see no reason. I said, fine, I got the message. Let me create the reason. And that is why in Lithuania we are welcoming fintech disruption. I want my market to develop better, faster, cheaper products for my consumers. And the only way things are changing, regardless of the industry, is if there is a competitive pressure. If you don't have a competitive pressure, nothing is changing.
Marius, that's a very, very good point, and maybe I can add some more thoughts about that, and we can go into more detail and talking about the future. I like the idea of disruption for sure, and with Tritra, of course, we try to be an attacker as well, and we want to revolutionize the area and the banking industry. But last year we conducted a very, very huge survey in Germany, and we interviewed 28,000 people via online panels, and we asked them about their relationship with the banks, and we did that together with the Handelsblatt. And the outcome for me was surprising and maybe also shocking a little bit, because reality is that out of the 28,000 people we interviewed via internet, so the online affine community, 2.6% said they are users and clients and customers of fintechs. 54% did not even heard the term fintech, and the rest heard about it but are not using it. So that's something different than disruption and innovation and radical movement. So my question is, since people adapt and change the bank relationships very, very, very slowly, and I think still you keep the relationship with your bank longer than you keep your wife, statistically speaking. If that doesn't change, I don't see a hope for all the fintechs for the revolution, because it gives the banks time enough to adapt ideas that are functioning, and that will kill the fintechs, or they're going in a cooperative style. And maybe we should talk about that, because for me, traditional banks have something that is a life guarantee, and that's millions of people in the middle or higher ages having all the money. So with those clients, you can earn money, and they're not going to switch to cool fintechs. So the fintech story will be a story, in my perspective, that will pop up and show up and really gain momentum, maybe in 15 years? Is that too long?
Can I interrupt here?
Sure, please.
Well, how many of you noticed a fintech transaction when you bought a coffee right here? Well, you didn't know. Did you notice? Did you see the terminal? It's iZettle. You know what? Consumers, they don't care. You know, they don't want to see that. You know, I see that from the regulatory side. He sees that from a supplier side. You know, consumers want a service. They don't care if it is provided by fintech, non-fintech, bank, right? But if you look at the statistics, globally speaking, the global banking community, the financial community, gets 60% income from transaction payment services. And that's something which we don't care about.
Yeah.
And then I actually, how many knows a company called WeChat? Yeah, approximately more than half. I'm very happy. I mean, I would say maybe that's one of the most successful fintechs, even it's not a fintech. So that's really the question. Like, no one can predict how this game will turn around. And I actually, the survey, I don't know the details about it, but I would raise a concern that was there enough voice from the young segment, millennials, Generation X, because they will redefine the future of banking. And I mean, for example, they did studies in US with millennials. They rather go to dentist than go to bank.
Yeah, sure.
So I mean, the message is very clear. So I mean,
I don't doubt that. I know it. Even 15 years ago, we had a study showing that people intuitively speeding up when they pass a bank branch because they feel uncomfortable from the side. And so they do not want to do window shopping in the bank. I think nobody of you ever did that, stopped on the window of a bank and said, oh, that's so cool, I'd like to have that.
Yeah. But banks are responding to that. Yeah. There is a bank in Lithuania where the branch is co-shared with a coffee shop. You go into the coffee shop, you sit down, you think you're sitting in front of a nice lady, but actually it's a teller of the bank.
Yeah. I have even better example. Is there anyone who's not using WhatsApp in the room? No one raising hand. Do you know that actually WhatsApp is pretty fast entering into this segment? Banking or payments first, but I think it's soon banking.
Let me interrupt our discussion here and add another idea. But then we have to discuss about what do we see banking will be in future, because we're talking about payments right now. We're not talking about finance, peer-to-peer lending, all that stuff. We're not talking about savings, investments, but we're talking about a lot of payments. And for sure, inside the payment field, like PayPal, I mean, they revolutionized internet industry and purchasing, and people are not aware that's a fintech too, if you want to.
I guess I would like to demystify banking and finance. Banking and finance is not rocket science, okay? It's transfer of risk and sharing of risk. That's exactly what finance is. Either it's peer-to-peer in a distributed fashion. If it is a financial institution, okay, it's risk transfer and management of risks at the institutional level. You know, banking has been what it has been thousands of years. You know, with Hawala systems and you know, personal loans. It will be that way. It's the form in which it will be provided will be changing.
And like in every business, the relationship with the buying in this case, customer, user. I mean, that's the determining factor. And I think the big shift is happening, and well, it started now with the payments of these most successful fintechs having hundreds of millions users, and they are acquiring those in the speed never happened before and never seen before. So I mean, who is having access to this customer interface will ultimately win the game in whatever form banking is ending up. And it's not only having the access to talk to the user in various channels, but it is also having the access to the data, being able to personalize the experience. And like what every user wants, they want to have best service they can get. And that is possible through the personalized experience. And to personalize the experience, you need data. You also need data enough to be intelligent to modify the service experience unique to basically every single user at the end. And the provider, either it's the big tech provider or one of the existing banks who can change, or the fintechs who are able to develop fast enough, will be very strong in that game, in the future of bank.
On this point, changes are not happening randomly or just by evolution. The reason why you have access to the data is because the state, the parliament, the European Parliament decided that we want a bit more competition in the banking sector. We want to diffuse with the selected few which have access to the consumer data in finance. And that's how PSD1 came into effect. That's how we all of a sudden got new regulated form of existence, payment institutions, electronic money institutions, right? That's how PSD2 was introduced, and that's why now you have account information service, which will, an open API, right? This is the regulator pushing the industry to open up. So that's how the change in banking is also happening. My first point was, it's what the consumers want. Yes? My second point is what the regulator wants. And on that point, if the regulator will see some risks which he is not happy with, believe me, we have the tools to stop it.
Okay, so maybe we come to the regulation a little bit later, because I would have some other questions too. But let's talk about maybe about the aspect of trust. And we're talking about a lot about data. We saw Mark Zuckerberg, I think, easily answering questions of old guys. How do you see the issue of trust and money? Because I think that's a very sensitive topic. And at least when it comes into building up funds and savings, and maybe not taking the money, because normally people take money easy but don't give it so easily. So how do you see the role of trust? Because in my perspective still, banks, even though they are not liked and not loved, definitely not loved, but hated, still people trust in the institution of a bank that's keeping them sort of safe and inflexible, even so European Union wants to have more competition and move people easily. But my first question is, will people still have the same trust barrier? I think young people are maybe not that sensitive in that aspect, because maybe they do not have the experience out of the Second World War and stuff like that. And second, how do you see the aspect of relationship building? For me, that sounds like the future of banking will be a very radical, tremendous, dynamic market, and people are not loyal anymore, and they go where they have the coolest feature and the coolest stuff. So how can then fintechs build up trust and build up and establish relationships in an electronical-driven business profile and model?
Yes, so let's start with the first question, the trust element. And yes, you are right, there are studies that no doubt the banks are the most trusted, and the big tech companies are barely in getting a little bit of trust, but that's still increasing. And if you ask the young segment, yeah, they haven't experienced the bad times or the crisis, and so they maybe are a bit more naive. but I would use word they become more financially independent and they learn and they are educated, so the trust also can be accessed through that process. And I have another example of gaining trust. What we use also as a service platform is the social channels user has in their phone, and that they can actually share the money-related topics also in the social channels. We see that the older generations actually don't want to do that. I mean, they would never ever put their finances into Facebook or anything like that. But the young generation is more open to that if it's convenient to them. And they don't see that the barrier is barely even there. So I mean, they are more open to that, but they need to be educated also. And I agree from the regulator point of view. I mean, you have your role, so it's as much needed as to keep the whole industry running and bringing the trust element there. But still, even the efforts in Europe. In US, they say that they want to do the open banking their own way, like more commercially driven. And in Asia, we already have seen how fast that has developed. So I'm not sure if the European model is still the best at the end of the day, but let's see.
The question of trust is much deeper than we are just scratching the surface here. If I trust you, I don't need to pay you, or you don't need to pay me, right? You just promise, and I trust you. The reason for finance, banking, and some intermediary that we trust more than each other is the reason because we don't trust each other, right? If we start questioning the intermediary, be that a bank or be that money of a state which is running deficits, then we lose trust in the system. We lose trust in the intermediary, right? On even deeper level, at the academic level, there is some analysis which shows that if I can keep track of all your previous transactions in your life, which you have done economically, and from that kind of gauge your economic standing and trustworthiness, it's equivalent of having money in the system. So if I have perfect knowledge of your transactions, if I have data, and you have that data about me, there is no need for money. So data is linking financial world, the question of trust, but then comes the question of whom do we trust with our data?
But that's then definitely leading into the blockchain discussion, which I think we're not gonna deep dive into it. When you talked about the concept of trust and transparency, I remembered in 2000, I think it was in 2009, there showed up a company that was called in the US, it was called Smarty Pig. I don't know if you have ever heard about it. And Smarty Pig's idea was to make the same like the Weight Watchers do. So to make your savings goal transparent, shout it out to the world via Facebook, and make all your peers partners in helping you establishing enough pressure to follow your goal. And when I first showed that concept to the banks in Austria and in Germany, they said, who would like to have something like this? And I think 4 or 5 years later, it was sold to India, and it's the ICICI Bank right now running the model. So I think definitely there will be a change in behavior within the next years of the next generation, definitely.
Yeah, and I mean, also looking to Asia, what has happened there is that, you know, these banking or financial services has actually integrated into same platforms which are used for social messaging, e-commerce, marketplaces. So that's a huge shift what is going on. So actually what's happening is that the traditional banking we understand is moving more into the background, and it integrates to this infrastructure. Actually the user are accessing through their mobile devices, well, smartphones, increasing amount, and that's the new way of consuming, and that's the new way of banking, I would say.
Maybe Marius, I can, since I see that the time is already turning into red right now, so we should come to an end. What I would like to ask you as a regulator is, how can the regulators maybe put more pressure on the banks to focus on customer drivenness? That's something which I do not find in the regulatory issues. You spoke about the risk management approach, and at least what I found is that here in Holland or in UK and even in Germany, regulators start monitoring or forcing CEOs to build up a risk culture. So to be aware of how the company is going into risk, and that things like what's going on in the Deutsche Bank right now, and it takes for years to reestablish a corporate culture or to change it. So how could the regulatory help banks to focus on things that for me seem to be important for them for a future?
I think this is a great question for which I'll admit I have no answer. I think regulators should be a bit more humble than they say, I know what the problem is and I know how to solve it, and I need another layer of regulation on top of that. Regulation is an easy shot. You might hit it, but there's a lot of wiggle room and you might miss it and create another layer of a problem, right? Just take one particular one, data privacy, okay? Raise your hand if you think that data privacy is not important and you would like to share data with everyone. I see 2 hands.
That was not the question, who wants a beer?
Okay? So in Europe, we have some values, and we value data privacy. Well, in other parts of the world, I'll point to that country, China, they don't. We have a different setup. So is data privacy at the level where we have enacted it with GDPR? Will it allow for faster and better provision of services in financial services? No, we understand that. But we need to keep a fine balance between certain values. If, facilitating money laundering or, feeding the money to corrupt politicians is less of a worry in some parts of the world, we have huge worry here. And that is how we project the regulation, the view of the financial market. So that is what is defining how we as regulators are shaping the financial world. It's not that regulators are stupid, they don't understand something. It's not that the banks or the bankers are stupid or they don't understand something. It's that we all are solving different objectives. But in the end, we have the same objective.
Sure. I just want to add one comment to the data privacy. It's actually an asset what the user has. Maybe they just haven't realized yet. I mean, like in many freemium model services, either you give consent to use your data or you have to pay or take the subscription. On other hand, this data can benefit also the user in a way that the service provider can personalize better the service. And I agree there has to be a balance and rules and everything, but on the other hand, this is an opportunity also for the user to get better service, faster and bigger benefits.
Maybe we can make something like a closing comment right now about the future, 21st century banking. How do we see the future? Will the concentration process that started will go on? Will we have in Europe, say, 10 major banks? How will they make money? What is left for them in the future? And how many fintechs will we have? Will they be solely or will they be part of a European banking landscape? Will number 26 and Revolut still be here? Will they be in a leading position, or are they just a minority in the niche?
My crystal ball is saying that I'm not gonna even start guessing the number of banks or fintechs. Maybe they don't even exist, we don't know. But I would say that the banking is consumed differently, and maybe not digital only, 100%, but very much increasing amount. Then I also would say that there's a room for new kind of players, and that's really the part no one can say that what's the form of doing this business in future. It could be as well as more peer-to-peer or shared finance based, as it could be the big tech companies coming into play and taking huge shares of from existing players, or the existing players can defend their positions successfully, still grow, add services, better services, and they can still, and I personally believe that there's room for everyone, also for including the fintechs, growing either independently or together with the partners, and that's why Bankify is in the game.
So in the next 45 seconds, I'm a strong believer in open banking. I think banks will embrace, and they are already embracing, in my opinion, the open banking way of operation. They are entering the collaboration mode. They don't see fintech as threat anymore because they are developing the business models of monetizing this relationship. I think this is a good thing. It's allowing the financial system to be much more flexible, much more quicker to react to changes. And those changes are not only coming from consumers here. It's the geopolitical changes, what our competitors in the rest of the world are doing, right? We want to be competitive, right? As industry in Europe, in Finland, in Lithuania. We want to keep competition. So if we can be faster in reaction, this open banking model will allow to do that. And regulators, I already said that, we need to be a bit more humble, and maybe we as regulators, we also need to open up. Maybe we need to understand that I have no clue about the latest fashion in ICOs, let's say. Well, I know, but there are 600 people in my team, which most of them have no clue because they were forbidden from trading to begin in, right? So maybe we can source the know-how. Maybe we can delegate some elements to the market. So that's how I see in the future.
You want to make the closing marks? Or shall I ask if there are questions left? Okay. Are there questions left? I think I can speak for us three. We will stay here and we would love to discuss with you personally.
€5 per minute.
Are you allowed
Tokens.
to do that?
Tokens.
Did you get it? Yeah, we have it, or? Okay, we can use it afterwards. So, thank you very much for joining me here.
Thank you.
I was the moderator right now.
Yeah, good job.
Thank you for jumping in.
And enjoy the conference.